Inflation is still in the headlines, which begs one of the original questions: why do we invest? So let's talk about how investing, particularly in businesses, can help answer that question. Hi, my name is Eric Blattner with Divvy Wealth Management, and thanks for watching. As always, we appreciate your support, and a couple things I want to mention before diving into the topic for the day. First of all, everything that we talk about in these videos is really for educational purposes, informational purposes only. Do not consider it financial advice. And also, if you enjoy listening to some of our thoughts on planning and markets and investing and things of that nature, the easiest way to follow along is to go over to our website. That's divvywealth.com, DIVVI wealth.com, and sign up for our blog there. Or you can go over to YouTube and search at Divvy Wealth Management and subscribe to our channel. So with that being said, let's turn to the topic of the day again, which for a lot of people in the last couple of years, the main headline has been inflation. Prices are rising just about everywhere you look, whether you're looking at your food bill or energy costs, a lot of different things that you might buy at stores. I mean, it's generally been across the board. Prices are way up. And it generally has led to the question, how do I keep up? And at least we've heard that question come up more than a few times over the last couple of years. How do you keep up with inflation? And for me, I think for me, this kind of begs the original question. One of the more one of the more basic questions that is just, why do we invest? And for me, the simplest answer is I think most people invest over the very long term to really protect your way of life, to you can't insure, like I hate the word insure. Nothing's guaranteed in this world, but to get closer to ensuring that quality of life, that way of life that your family enjoys, investing can be um, one of the best ways to accomplish those goals. And what do I mean by that? When I talk about investing, very specifically, I'm talking about investing in businesses. I know there's going to be plenty of folks out there that have done similar things within real estate, but my focus for today is really investing in businesses. And the reason that I say investing in businesses can be one of the simplest and most time-tested approaches to protecting purchasing power, protecting your way of life, is we have a lot of data to back it up. And so we'll start with this. This chart shows the annualized inflation rate, or the annualized rise in consumer prices going back to 1947. And inflation has averaged about 3.5% during that time frame. That's the orange bar. The green bar is after-tax corporate profits. There's a little nuance with this. So I'll put a link to the actual data set from the St. Louis Federal Reserve. At least that's where I pulled it. But this is the green bar represents after-tax profits. And those profits have grown at more than 7%, more than double the rate of inflation during the same length of time. So while certain businesses may fail, there's plenty of small businesses and plenty of big businesses that do fail over time. Collectively, the group has been able to figure it out, has been able to generate growth in profits that substantially outpaced inflation over the very long run. So that's the first point. So the second thing I would mention is that when you're investing, particularly investing in businesses, you need to keep a long-term focus. And I'm going to show another chart here that kind of makes that point. When we're talking about these corporate profits, these corporate after-tax profits, and again, we're going back to the question, why do we invest? And we think that owning businesses that generate real earnings and real growth in profits over time, and as an investor, as an owner of those businesses, you have a claim or a right to a certain percentage of those profits. Why that matters over long periods of time. Hopefully this helps reinforce that idea. So again, this is that same data point, corporate after tax profits going back almost 80 years now. And what you can see is they don't grow all the time, but they have typically grown over time. So the orange line in this chart represents the 3-year rolling after-tax corporate profits going back to 1947. When I say 3-year rolling, it's basically taking a snapshot quarter by quarter. How did profits grow this 3 years? And then it moves forward a quarter, then this 3 years, then this 3 years, then this 3 years, so on and so forth. And what you see is there's lots of ups, lots of downs, lots of peaks, lots of valleys. And they call the business cycle a cycle for a reason, is because it does go up and down, especially in the short run. And there have been at least 10 of these periods where corporate profits have actually fallen and gone negative. And I've highlighted those with the negative numbers at the bottom of this chart. So that's why I said when you invest in businesses, having a long-term view is really important. What happens over the next 6 months, 12 months, 2 years, 3 years? I think it's really difficult to predict, but when we zoom out and look at a longer-term picture, those profits and those growth of profits has been much more consistent. So the green shaded area represents not the 3-year rolling returns like the orange line. The green shaded area represents 20-year rolling returns. So very, very long periods of time. And what this shows is that American businesses, given enough time, have been able to figure out how to pretty consistently grow those profits over the long term. That green shaded area is much less volatile and has been positive over every single time period. So that's why we say keep a long-term view when you're thinking about investing in businesses, when you're thinking about protecting your purchasing power or even growing your purchasing power and giving yourself the opportunity to buy more stuff, more goods and services 5, 10, 20 years from now. So I think the punchline for me is whether you think about wars, elections, recessions, expansions. I mentioned recessions in that chart. The green shaded area, those are recessions. So those 3-year numbers, when they turn negative, many times they coincided with economic recessions. But regardless of whatever the macroeconomic backdrop was, over long enough time periods, in this case 20 years, American businesses and the men and women behind them have figured out a way to pretty darn consistently grow those profits over time. Okay, going back to the very beginning of this the video, the post, we asked the question, why do we invest? And really we asked it in the context of inflation, protecting our way of life, trying to improve our way of life. And I suggested that investing is one of the simplest reasons that, or simplest ways to go about this over the long term. Simple, not easy, but it does require a long-term mindset. The last piece I want to kind of tie in here is income. And, for most of us that are in our working lives still, we're in what's called an accumulation phase, and we are trying to grow our investable assets. And ultimately, most of us will turn that into income at some point. And when we talk about investing in businesses, there's really, there's quite a few things that businesses can do with their extra cash. When I talk about excess cash or extra cash, I'm talking about beyond the cash that is needed for day-to-day operations, paying the bills, paying the employees, kind of the basic day-to-day stuff. When we talk about the extra cash that companies have, they can do a handful of things with it. First, they can pay down debt. If you've borrowed money to grow, first thing you can do with that excess cash is you can pay down debt. You can also just keep it on the balance sheet, earn some interest, and save it for other opportunities down the road. You can spend it on research, developing new ideas, and ultimately investing in projects that you would expect to deliver more returns, more profits for owners into the future. And then a fourth reason, or a fourth way that companies can kind of put their cash to use, is to return it to shareholders. And this is typically done one of two ways. The first is with a shareholder buyback. That's where a company like Microsoft, for example, might go into the market and buy back a certain number of shares at a certain price. And that essentially is a way to return capital to investors. The second way, the more common way, historically, going way back, is via dividends. And many companies will pay out a certain percentage of their profits each and every quarter, each and every year, in the form of dividends to their owners. So as an investor, as a business owner, I have a right to a certain percentage of those profits. And the great thing about investing in businesses for the long term is that, or one of the great things has been that those dividend payments have historically gone up over time. So again, in the context of protecting purchasing power, if I'm thinking about how to invest my assets in a way that can generate an income stream for me and my family, one of my options is to go and buy things like CDs or fixed rate loan investments. When I talk about loans like CDs, I'm loaning my money to the bank. If I'm buying a corporate bond, I'm loaning my money to that company. And I'm typically going to get a fixed interest rate for a certain length of time, and they're going to give me my money back. And that income level is going to be very dependent upon the interest rate environment. Today, interest rates are quite a bit higher than we have seen in the last 10 or 15 years. So the amount of income you can generate is pretty attractive relative to recent history. But I would argue that if you're a long-term investor interested in growing your income over time, investing in businesses still makes a lot of sense, or could make a lot of sense. And this chart hopefully helps reinforce that idea. So this shows the dividends per share for the S&P 500 going back to 1988. And it also compares it to inflation. So consumer prices, inflation, that's the orange line. Since 1988, consumer prices are up 168%. And those company dividends, those S&P 500 dividends, have grown over 700% during the same time period. So for those folks interested in an income stream that gives you a pay raise, that grows over time, investing in businesses can still be a great way to accomplish that. So hopefully this helps. If I'll go back to the beginning, if you enjoy kind of following along with thoughts and ideas that we have on markets and investing, the best way to stay up to date with us is go to our website, divvywealth.com, and sign up for our blog there, or head over to YouTube and search at Divvy Wealth Management and subscribe to our channel. If you have any questions or would love to kind of talk about your situation or just talk about inflation and investing more generally, please don't be shy. Reach out, and we'd love to connect. So with that, we'll say thanks again and hope you have a great day. Take care.